Yes, everyone. How are you all? Very good morning, everyone. Now, today in this revision video, we'll take AS19, that is accounting for lease. Let us start the revision. So, this AS19 is not applicable, means this AS19 is not applicable to which lease. So, of course, all the lease are covered under AS19 except lease agreement to explore or use natural resources, means any lease agreement to explore or use natural resources will not be covered under AS19. Second, any licensing agreement for items such as motion picture, film, videos, recording, plays, manuscript are also not covered in this particular chapter. And the lease agreement to use land, only land, will not be covered in this chapter. Got this point? So these are outside the scope of AS19. So what do you mean by lease? Lease is an agreement whereby, the lessor means the supplier of the asset. Lessor will be the person who is supply the asset. So is an agreement whereby the lessor convey to the lessee, to convey some right to the lessee, to convey to the lessee the right to use an asset for an agreed period of time in return for a payment or series of payment. Understood? So in this agreement, lessor convey to the lessee right to use an asset for a specified period of time in return of a payment or a series of payment. This agreement is known as lease agreement. Now for accounting purpose, all the lease are of two types. One is known as finance lease, one is known as operating lease. So what are finance lease? Finance lease is a lease that transfers substantially all the risk and reward incidental to the ownership of that asset to the lessee. Means in any lease, if the lessor transfer substantially all the risk and reward incidental to the ownership, then that lease will be classified as finance lease. Otherwise, the lease will be operating lease. Now AS19 has given 5 situations in that lease will be always classified as finance lease. Means these are the indicator that lease will be classified as finance lease. The first, the lessee will get the ownership of the asset by the end of lease term. Means in any lease agreement, if the lessee is getting the ownership of that asset at the end of lease term, then that will be classified as finance lease. This is nothing but, I will say, hire purchase agreement. In case of hire purchase agreement, the hire purchaser will get the ownership at the end of the agreement. Therefore, that hire purchase is nothing but an example of finance lease. Got this point? Second, the lessee has an option to purchase the lease asset. So lessee will have an option to purchase the lease asset at the end of lease term at a price which will be sufficiently lower than the fair value of that asset when the option become exercisable. Means when the option will be exercised, at that time whatever is the fair value of the asset, the option price will be very less than that. Correct? So lessee has an option to purchase the lease asset at the end of lease term at a price which is lower than the expected fair value of that asset at a time when the option become exercisable. If this is the case, then it will be classified as what? Finance lease. Third point is what? The lease term cover the major part of the economic life of the asset. So if the lease term is covering the major part of the economic life of the asset, even though the ownership is not transferred, that lease will be also classified as finance lease. Now this major part has not been defined. From exam point of view, we will take 75%. If the lease term covers 75% or more than 75% of the economic life of the asset, will conclude that yes, it is a finance lease. But this is only from exam point of view. Practically, we need to apply judgment. Yes, sir. Now point number D, what says ki on inception of lease, if the present value of minimum lease payment covers substantially the fair value of the asset, then this will be also finance lease. Means in simple word, present value of minimum lease payment will be approximately equal to the fair value of the asset. Means can a lessor will try to recover entire fair value of the asset. It means it is just like a sale. Understood? So on inception of lease, the present value of minimum lease payment covers substantially the initial value of leased asset. Once again, the word substantially has not been defined. From exam point of view, it will be equal to 90%. So if the present value of minimum lease payment is either equal to or more than 90% of the fair value, from exam point of view, it will be a finance lease. Last point, the lease asset is of such the lease asset is of a specialized nature which can be used only by lessee unless major modification is being made. Means that whatever asset has been given on lease, that asset can be used only by lessee. It cannot be used by any other person unless major modification is being made. Then that lease will be also classified as finance lease. Understood? So these are the 5 indicator where always the lease will be classified as finance lease. Understood? Yes sir. Now coming to some definition you can do. Now the most important definition, lease payment. Can I say in this chapter we need to identify the lease payment. So lease payment comprise of minimum payment payable over the lease term. So whatever minimum payment as per agreement is payable over the lease term will be a part of lease payment, plus any purchase option price. If there is any purchase option price, means an option has been given to the lessee that they can purchase the asset, then that purchase option price will be a part of lease payment. But when purchase option price, if the lessee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date when the option become exercisable, then only they will exercise the purchase option. Means if the purchase option price is more than the fair value at the end of lease term, then they will never exercise the purchase option. Correct? Now so lease payment will comprise of lease payment over the lease term plus purchase option price. What AS 19 says that all the payment made by lessee to lessor will not be a part of lease payment. So there are some payment which will not be included in the definition of lease payment. For example, contingent rent. Now contingent rent or lease payment based on the factor other than the passage of time. For example, based on the percentage of sales or based on the performance or usage of the asset. If some rent is contingent on the happening or non-happening of some condition in future, so that is known as contingent rent, and contingent rent will not be a part of lease payment. So any payment which is based on the factor other than passage of time, for example percentage sale, amount of usage or whatever, market rate of interest, so that will not be included in the lease payment. Second, cost for services. Means suppose the lessor is providing some services along with what, the supply of the asset, so that services, whatever services has been provided, for that whatever payment is paid or received, that will not be a part of lease payment. Correct? So any cost for services will not be a part of lease payment. Then taxes to be paid by or reimbursed to the seller. Suppose lessee is paying the taxes of that property or whatever, and or reimburse the taxes, that will also be not part of a lease payment. So these are excluded from the definition of lease payment. What I excluded from a definition of lease payment, can you repeat with me? Contingent rent, cost for services, and taxes to be paid to or reimbursed, taxes to be paid by or reimbursed by what? Reimbursed to the lessor. Correct? Means simple word, lease payment will include minimum lease payment agreed to be paid over the lease term plus purchase option price. But purchase option price will be included if the lessee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value of the asset when the option become exercisable. Got this point? Yes sir. Now in this chapter we need to also find out minimum lease payment. Abhi we have defined lease payment, but what do you mean by minimum lease payment? So minimum lease payment is calculated differently from the point of view of lessee and from the point of view of lessor. So from the point of lessee means whenever you are in the books of lessee, you need to calculate minimum lease payment from the point of lessee. So that will be lease payment over the lease term. Now we have understood lease payment include minimum lease payment over the lease term plus purchase option price plus any guaranteed residual value in respect of lessee. So it is quite possible some residual value has been granted by lessee to lessor. That residual value guaranteed by lessee can be by lessee or on behalf of lessee, either by lessee or on behalf of lessee. So any GRB in respect of lessee will be also included. But can I say if there is a purchase option price, then there will be no GRB. So GRB will come only when there is no purchase option price. So GRB means what? Guaranteed residual value means what? If suppose the lessee want to purchase the asset at the end of lease term, but if there is no purchase option given in the agreement, then they will give a guarantee to the lessor that they want to purchase the asset at this price. That become the guaranteed residual value. Understood? So lease payment from the minimum lease payment from the point of lessee will be what? Lease payment over the lease term plus GRB in respect of lessee. Now from the point of lessor, it will be lease payment over the lease term plus GRB in respect of lessor. Now GRB in respect of lessor means what? Residual value guaranteed by lessee or on behalf of lessee or by any third party who are financially capable. It is quite possible lessor may receive guarantee from the lessee as well as from any third party. For example, they receive a guarantee of rupees 10,000 from lessee that lessee want to purchase the asset at the end of lease term by payment of rupees 10,000. But similar guarantee is received by third party and they can purchase the asset at the end of lease term by payment of rupees 15,000. So from lessor point of view, can you say what is beneficial? 15,000 is beneficial. So from their point of view, guaranteed residual value will be 15,000, not 10,000, correct? So residual value guaranteed by lessee or on behalf of lessee or by any third party, whichever is higher. We can say whichever is higher, whichever is higher. So can you repeat with me what is the minimum lease payment from the point of lessee? It is lease payment over the lease term, lease payment over the lease term plus guaranteed residual value in respect of lessee, correct? What is the GRV? What is the minimum lease payment from the point of lessor? It is lease payment over the lease term plus GRV in respect of lessor, and GRV in respect of lessor is residual value guaranteed by lessee or on behalf of lessee or by any third party which are financially capable, whichever is higher. Got this point? Now let us come to the accounting treatment. Now first we'll do accounting treatment for finance lease in the books of lessee. In the books of lessee. So can I say in the books of lessee? Can I say in the books of lessee in case of finance lease? For we need to recognize a lease asset and a lease liability, lease asset and a lease liability, because substantially all the risk and reward has been transferred. So once the substantially all the risk and reward has been transferred, so that asset will be recognized in the books of lessee. So what journal entry will pass? Lease asset account debit to lease liability, lease asset account debit to lease liability, correct? Now the question arises at which amount? So this will be recognized at an amount which will be lower of fair value of the asset on inception of lease, fair value of asset on inception of lease. On inception means on the date of agreement. So fair value of asset on inception of lease or present value of minimum lease payment, present value of minimum lease payment from the standpoint of view of lessee, from the standpoint of view of lessee. So now we know what is minimum lease payment from the point of lessee. It is the lease payment over the lease term plus GRB in respect of lessee. So present value of minimum lease payment should be calculated by using interest rate implicit on the lease. Interest rate implicit on the lease, but if the interest rate implicit on the lease cannot be calculated, cannot be determined, then present value will be calculated by using lessee incremental borrowing rate. From exam point of view, present value will be calculated as per the discount rate given in the question. But suppose they have given two rate of interest. One is the interest rate implicit in lease and second is lessee incremental borrowing rate. The first preference will be given to what? Interest rate implicit in lease. If it cannot be determined, then we'll use lessee incremental borrowing rate. Understood? Yes, sir. Now, sir, what do you mean by interest rate implicit on lease? This is actually determined from lessor point of view. So, I will explain this word interest rate implicit in lease when we'll do lessor accounting. One thing you have understood that we need to pass journal entry on inception of lease in the books of lessee. The journal entry will be lease asset account debit lease liability. It will be recognized at an amount equal to which is lower of fair value of asset on inception of lease or present value of minimum lease payment from the standpoint lessee. That present value will be calculated by using interest rate implicit on lease or lessee incremental borrowing rate. Now for initial direct cost for finance lease, suppose any initial direct cost is incurred by lessee, so that initial direct cost will be capitalized to lease asset, will pass one journal entry lease asset account debit to bank. Then for recognition of finance charge, can I see this lease liability, the lease liability or lease payment, whatever we are doing, that will include some interest component. So we recognize finance charges. The finance charges account debit to lease liability. The journal entry finance charges account debit lease liability. The rate of discount whatever has been used, based on that rate of discount will calculate finance charges. So finance charges account debit to lease liability. Then for payment or lease payment on due date, journal entry will be lease liability account debit to bank. So lease liability will reduce, lease liability account debit to bank. Now for contingent rent or cost of service or taxes which are not included in lease payment, so this were not a part of lease payment, so this will be recognized as an expense when as and when they are incurred. So they will be recognized as an expense as and when they are incurred. This is the journal entry in the books of lessee. Understood? Let me take one question. Come to question number 18. What is given? Not 18, not. Come to question number 10. Lessee Limited took a machine on lease from the lessor, the fair value being 7 lakh. The economic life of the machine as well as the lease term is 3 years. So you can see economic life and lease term are same. It means can I say it is a finance lease because the asset is given for 3 years, which is exactly equal to economic life. At the end of each year, Lessee Limited pays 3 lakh. This is the annual lease payment. The lessee has guaranteed residual value of 22,000 on expiry of lease to the lessor. So GRB in respect of lessee is what? 22,000. However, the lessor estimate the residual value of machinery will be only 15,000. Again, this information is not relevant from lessee accounting point of view. What is the expectation of lessor? That is not important from lessee accounting. That will be important from lessor accounting point of view. Correct? The implicit rate of return is given 15% per annum, and the present value factor also given for 15%, that is also given. Calculate the value of machine to be considered by lessee and the finance charges each year. So can I say we'll first find out the value of machinery. Correct? So can I say value of machinery will be equal to what? So if I say value of machinery will be equal to lower of fair value is given 7 lakh. Second, present value of minimum lease payment from the standpoint of lessee. So they have given 3 lakh. 3 lakh is the annual lease payment multiplied by present value annuity factor. So they have given what? Annuity factor they have given for 3 year. Present value factor they have given 0.869 plus 0.756 plus 0.657. It is coming 2.282. So we'll do 2.282 plus what is the GRB? GRB is what? 22,000. This is payable at the end of third year. So what is the present value annuity factor? That is 657. So 0.657. If you solve this, what is coming? Check karo. So 3 lakh into annuity factor, that is 6 lakh 84,600 plus 22,000 into 0.657. This is coming how much? 14,454 plus 6 lakh 84,600. So this is coming 6 lakh. This is 6,99,054, which is approximately equal to 7 lakh. Means I will say you can write on 7 lakh, but institute is taking lower, so we'll also take lower. But I will say this is approximately equal to fair value only. Correct now. So from my point of view, it should be 7 lakh, but we'll go as per institute. So value of machinery and lease liability will be equal to what? 6 lakh 99,054. Means initially we'll pass one journal entry, lease asset account debit to lease liability at 6,99,054, 6,99,054. Now they have also asked you to calculate one finance charges. So for that, what we'll do, we'll prepare one table for 3 years. So we write on opening liability, then we write on finance charges, then we write on lease payment, then we write on closing liability. So opening liability is 6,99,054 into what is the rate of interest? Rate of interest means we have calculated at 15%. So 15% laga do into 15%. How much it is coming? It is coming 1,04,858, and the lease payment is 3 lakh. So this will do plus, this will do minus. Correct? So minus 3 lakh is equal to the closing balance will be 5,03,912. 5,03,912. Then 5,03,912. 1 second interest will calculate at a rate of 15%. This will come 75,587. 587. 1 second minus 3 lakh will do. 1 second minus 3 lakh. So plus minus 3 lakh is equal to how much? It is coming 2,79,498. Yeah, 499. The last year 2,79,499, and again last year we'll take balancing figure. So this will be 3 lakh. And what was the GRB? GRB you can add on closing balance 22,000, because we don't know whether they are actually purchasing the asset by payment of 22,000 or not. So this will become a closing balance because we don't know the actual happening. So this will come as a balancing figure. So minus kar do 3,22,000, it will come 42,000 501. So this become finance charges of each year. Finance charges of each year. So that only has been calculated. Check karo. The same amount has been calculated. There is some difference. The difference is coming 1,04,000. First is correct 75. I think they have not taken as a balancing figure, but we'll always take it as a balancing figure only. Chalega? Yes, sir. I hope you have understood this point. Now, if you want to pass journal entry, so the next journal entry at year end will be finance charges account debit to lease liability. How much? 1,04,858. 1,04,858. And then lease liability account debit to bank. Lease liability account debit to bank, that is 3 lakh. You can also pass a compound journal entry for this. So this is one type of question which can be asked in exam. Correct. So for lessee I have seen they are normally asking this type of question. They are asking to calculate value of machinery as well as value of leased asset and lease liability on inception lease, then calculation of finance charges, and then journal entry for 1 year. That you can do it. Correct. Yes sir. Understood. Karo. Now this lease asset will be depreciated. Of course this lease asset require depreciation. So for charging of depreciation, can you see it should be depreciated over the lease term? But what AS 19 says that if the ownership will be transferred at the end of lease term. So if it is expected that ownership will be transferred at the end of lease term, then depreciation will be calculated based on the useful life, not lease term. But if the ownership is not going to be transferred at the end of lease term, then depreciation will be calculated based on lease term or useful life, whichever is lower. This is important, can be important for MCQs type of question. So they have journal entry will be depreciation account debit to accumulated depreciation. Chalega? Understood. If nothing has been given about the transfer of ownership in the last question, that will be amortized. The lease asset will be depreciated over 3 years. Okay, miss lease term. In that case, lease term and economic life was same also. Now coming to lessor accounting finance lease. Now as per AS 19, the lessor can be either manufacturer or non-manufacturer. When I am saying non-manufacturer means he may be acting like a financer or he might be a manufacturer. If he is a manufacturer, then can I say then he is nothing but selling their inventory, then we will recognize the revenue in the books of manufacturer. But if he is not a manufacturer, then it will just like a sale of an asset, and we need to recognize gain or loss on sale of asset. So what journal entry will do? If lessor is a manufacturer dealer, we'll pass one journal entry, lease receivable account debit to sales. Correct. But if the lessor is not a manufacturer, they will pass journal entry, lease receivable account debit to asset. Correct. Asset will be credited with what? Book value. Lease receivable will be debited with net investment. Now I need to explain what is the meaning of net investment, how to calculate net investment. Correct. Can I say if he is not a manufacturer, any difference between this journal entry will be gain or loss on sale, and that will be transferred to profit and loss account. Correct. Now I need to explain what is net investment. So net investment means what? Net investment in lease means what? This is nothing but present value of gross investment. Present value of gross investment. Now I need to explain what is the gross investment. So gross investment means what? MLP from the MLP means minimum lease payment. Minimum lease payment from the point of lessor plus UGRB. UGRB means unguaranteed residual value. Now minimum lease payment from the point of lessor means what? It is lease payment over the lease term plus GRB in respect of lessor. UGRB means what? Expected residual value, means it is quite possible lessor is expecting some amount. Suppose he is expecting 1 lakh that it will be realized at the end of lease term, but guarantee we have received only for 80,000. So unguaranteed residual value will come ERB minus GRB, will be unguaranteed residual value. So this is what net investment. So net investment means what? Present value of gross investment. Gross investment means what? MLP from the point of lessor plus UGRB. MLP from the point of lessor means what? It is lease payment over the lease term plus GRB in respect of lessor. Now GRB in respect of lessor means what? Residual value guaranteed by lessee or on behalf of lessee or by any third party whichever liar. But in exam, normally GRB of lessee and GRB of lessor will be same. Normally, are you getting? Unguaranteed residual value will be what? Expected residual value minus GRB, whatever has been given. So we can say कि the net investment is nothing but present value of lease payment plus GRB plus UGRB. This can be seen. So net investment is nothing but present value of lease payment over the lease term plus GRB and plus UGRB. Correct? Got this point? Yes, sir. Now this will be also discounted. This will be discounted by using interest rate implicit on the lease. Interest rate implicit on the lease. Correct? So what they want to say? Ki net investment is equal to gross investment minus unearned finance income. Unearned finance income is interest income. So from future payment, if you deduct interest payment, that will be present value only. So gross investment minus unearned finance income. Gross investment means MLP from the standpoint of lessor plus unguaranteed residual value. Unguaranteed residual value means expected residual value minus guaranteed residual value. Guaranteed residual value in respect of lessor means residual value guaranteed by lessee or on behalf of lessee or by third party, whichever is higher. Correct? Unearned finance income, we can, because sometimes they will ask you to calculate unearned finance income. So can you say future payment minus present value is unearned finance income, means gross investment minus net investment is equal to unearned finance income. So thus net investment is equal to present value of gross investment. Present value of gross investment. Got this point? Only the entire question will be based on this formula. Entire question will be based on this formula. If you have understood this, so you can do all the question of ICS study matter here. Now present value of minimum lease payment should be calculated by using interest rate implicit in the lease. Now what AS 19 says that interest rate implicit in lease is nothing but the rate of interest at which present value of minimum lease payment plus present value of UGRB must be equal to fair value. Must be equal to fair value of asset on the inception of lease. Means can I say by using the internal rate of return concept, means IRR concept, whatever you have done in FM, we can calculate interest rate implicit on lease. So they may ask you to calculate interest rate implicit on lease. So what they want to say, interest rate implicit on lease is the discount rate at which aggregate of present value of minimum lease payment and any unguaranteed residual value is equal to fair value of the leased asset. Let me take one question, because this type of question can be asked in exam. You can see one question has been given. What do you understand by interest rate implicit on lease? That we can define, we can write on the definition. Calculate interest rate if the annual lease rent is 80,000 at the end of each year, lease period is 5 years, GRB is 40,000, UGRB is 24,000, fair value is 3,20,000. Discount rate they have given at the rate of 10%, at the rate of 14%. So can you say we can find out present value of minimum lease payment plus UGRB at 10% and 14%, that we can find out. You can see year 1, year 2, year 3, year 4, year 5, year 5, year 5. This is what? This 5 are lease payment. This is GRB. This is UGRB. So GRB, UGRB will be payable at the end of 5th year. Now at a rate of 10%, this is given in the question. This is given in the question. Multiply karo. This is the present value of gross investment at 10%. Present value of gross investment at 10%. Then this is actually 14%. Then you can find out present value of same amount at 14%. This is present value at 14%. Now between this amount, you can see the fair value is how much? Fair value is what? 3,20,000. So can you say this is more than 3,20,000? This is less than 3,20,000. Now we can use IRR concept. So IRR में formula क्या है कि lower rate of interest plus we'll do plus 3,42,000 minus fair value, that is 3,20,000 divided by 3,42,944 minus 3,07,776 into the differential rate. Means what is the formula? If you remember that FM का IRR concept, the formula is what? IRR is equal to lower rate of interest 10%, then present value at lower rate of interest, that is 3,42,944 minus will do what? The desired amount, desired fair value, that is 3,20,000 divided by 3,42,944. Then present value at higher rate of interest, that is 3,07,776 into the differential in rate of interest, that is 14% minus 10%. If you solve this, so you will get IRR. As per the solving, we are getting 12.61. So answer will become 12.61. 12.61%. So they may ask this type of question, which is nothing but IRR concept. Understood? Have you understood this point? This can be one possible question. Yes, sir. Now coming to the initial direct cost of finance lease, normally they don't ask initial direct cost, but suppose they have given initial direct cost incurred by lessor. So what they have said, we have two options for the accounting treatment of initial direct cost. Either this can be charged to PL account as an expense immediately, or it can be deferred and amortized over the lease term in the ratio of what? In the ratio of finance income. In the ratio of finance income. Correct? So there are two options. Either these initial direct costs are either recognized immediately in SOPL as an expense or allocated against finance income over the lease term. Means it will be deferred and will be recognized as an expense over the lease term in the ratio of finance income. In the ratio of finance income. Chalega. Now for recognition of finance income, journal entry lease receivable to finance income, lease receivable account debit to finance income. Once the lease payment is received, bank account debit to lease receivable. And for contingent rent, cost of service, taxes, if that amount received, so that will become income as and when they earned. As and when they earned means the whatever payment we have received, bank account debit to respective income will do. Bank account debit to respective income. Got this fine? This was accounting treatment in the books of Lessor. Let me take some question. Come to question number 4. Prakash Limited leased the machine to Badal Limited on the following term. You can see they have given fair value machine, lease term, lease rental per annum. So lease rental per annum, GRB, ERB. So what is UGRB? UGRB will be equal to ERB minus GRB. That is how much? 1.40. So your UGR will be 1.40. Internal rate of return is given, means interest rate implicit on lease in the given. They have given discount rate. They have given calculate unearned finance income. It means first you need to find out net investment. So what will be the net investment? Batao. Net investment will be the lease rent is 8 lakh. 8 lakh multiplied by the sum total of these. Can you give me? This is 0.8696 plus 0.7561 plus 0.6575 plus 0.5718 plus 0.4972. So this is coming 3 point. So this is 3.3522. Then can you say GRB is how much? GRB is 1.6. So 1,60,000 into 0.4972 and UGRB is 1,40,000. So 1,40,000 into 0.4972. If you solve it, how much it is coming? Into 8 lakh kar do isme. So this is coming how much? 26,81,760. और ये कितना हो जाएगा? This is 3 lakh. Total 3 lakh into 0.4972. This is coming 1,49,160 plus कर दो 26 lakh 81,760. So this is coming how much? This will come 28 lakh 30,920. So 28 lakh 30,920 is what? The net investment. Gross investment you can find out. Gross investment is what? 8 lakh into 5. That is 40 lakh. 40 lakh plus 3. So 43 lakh is what? Your gross investment. So this minus this how much? 28 lakh 30,000. 30 or 36? It was 28 lakh 30,000. Exactly we have calculated. Check karo 28 lakh 30,000 920. 920. So difference coming 11 lakh. So देखो what I've done. So 43 lakh. The 43 lakh minus 28 lakh 30,920 is coming 14 lakh 69,080. So exactly same answer is coming, but in exam do in this tabular format. So of course you can do. So you can see first year 8 lakh, 8 lakh, correct na? 8 lakh, 8 lakh, 8 lakh, 8 lakh, 8 lakh. Then GRB is 1,60,000, UGRB is 1,40,000. Apply discounting factor. This will come what? the net investment compared with the gross investment. Gross investment is what? The total of future value. So 43 lakh is gross investment. This is the net investment. इन दोनों का जो difference होगा, that will be what? Unearned finance income. This type of one question can be asked. Understood? One more question which is very much popular is like this. Question 11. BNP Limited availed a lease from NN Limited. The condition of lease term are as under. Lease period is 3 years. In the beginning of year 2009 for equipment costing rupees 10 lakh and has an expected useful life of 5 years. The fair market value is also 10 lakh. The property revert back to the lessor on termination of lease. The UGRB is given 1 lakh. 3 equal annual payment are made at the end of each year. But what is the equal payment that is not given? Means in this question the equal lease annual payment is not given. Consider IRR 10%. The present value is given. State whether the lease constitute finance lease and also calculate unearned finance income. This is one of the popular question. In this question, what is not given? 3 equal annual payment is not given. So first we need to find out lease payment, annual lease payment. For that we'll assume that let annual lease payment be X. Means I'm just showing you with my calculation. Just try to understand. Let me explain you. So what we'll do? We'll assume calculation of annual lease payment. Let annual lease payment be X. Then we know one formula, that present value of MLP is plus present value of UGRB will be equal to fair value. This formula we know at interest rate implicit lease. This will be always equal to fair value. So present value of MLP is equal to present value of lease payment plus present value of GRB plus present value of UGRB is equal to fair value. Now we can apply, because lease payment we have considered X. So X into the annuity factor. Annuity factor is also given. Find out the total of annuity factor. Then GRB is not given, then nil. And UGRB they have given 1 lakh. 1 lakh into the present value factor at the end of what is the lease term? Lease term is 3 years na. So at the end of 3rd year that is given. That is how much? You can see annuity factor is given this. And at the end it is 0.7513. This all are given. So 0.7513. So this if you solve, X will be equal to this. If you solve this, X you can calculate. So annual lease payment is 3,71,912. Now we'll find the nature of lease. So we know that as per the AS19, if on inception of lease, present value of minimum lease payment substantially cover the fair value of asset, then it will be a finance lease. Correct? Now let us find out in the given case what is the present value of minimum lease payment. Minimum lease payment means minimum lease payment will be exclusive of UGRB. So we have present value lease payment plus present value GRB. GRB is nil. So we'll find out 3 point, because this already we calculated into annuity factor. This will be the present value of minimum lease payment. Now we'll compare this with the fair value. So divided by 10 lakh. Divided by 10 lakh will do, because 10 lakh is the fair value. So that will come 92.48% of fair value. Means this 9,24,871 is 92.48% of fair value. Then can I say therefore the condition is satisfied and therefore the given lease is a finance lease. Given lease is the finance lease. Now they have asked you to calculate unearned finance income, that is equal to gross investment. Gross investment in this case is nothing but the fair value, and fair value is how gross investment is nothing but the total of all future payment, that is lease payment is 3,71,912 multiplied by 3 plus UGRB 1 lakh. This become gross investment minus fair value. Net investment is nothing but fair value, because present value is equal to fair value, that is 10 lakh. The difference of this will be the unearned finance income. Unearned finance income. Got this point? Have you understood? This can be one possible question. One possible question which is important from exam point of view. I hope you have understood. So this was lesser accounting. Let us come to operating lease. Now operating lease is very simple. Operating lease is very simple. Books of lessee, books of lessor. So can I say, of course now the asset will not be recognized in the books of lessee. It will remain in the books of lessor only. And in the books of lessor it will be classified as property, plant and equipment. Or if it is a property, it can be investment property, because any investment property are those property from which we are earning rental income. So it may be also classified as investment property in the books of lessor. Depreciation, no depreciation in the books of lessee, but they will charge, lessor will charge depreciation as per the requirement of AS10. Lease payment, what they say, कि lease payment should be recognized as an expense over the lease term on SLM basis unless there is some appropriate method. Means if any other method is more appropriate, that method can be used. Means as per the information given the question, means the total lease payment divided by lease term, that will become annual lease income. But if there is some any other appropriate method is given the question, that method will applied over what SLM basis. Same thing in the books of lessor, it will be recognized as an expense over the lease term. Sorry, in the books of lessee it is an expense, in the books of lessor it will be an income. Recognize lease income in PL using SLM basis over the lease term. If any other method is there, you can apply that method also. Contingent rent other payment will be recognized as an expense or income in respective book as and when they are incurred or earned. Initial direct cost for lessee, this point is not applicable. For lessor, they want to say that this will be charged to, this will be recognized as an expense in the year in which they are incurred in case of operating lease. In case of operating lease. So this is very simple. Let me take one question. That is a expected question in exam. The question is this. Yeah. A machine was given on 3-year operating lease by a dealer of the machine for equal annual lease rental to yield 30% profit margin on cost. 30% of means what is given on 3 years, and the economic life is 5 years. Means what is the total amount to be recovered in 5 years? That is 2,25,000 into 30% plus kar do. So what is 2,25,000 into 30% plus? So total become 2,92,500. Now they are saying output from the machine is estimated this. So 5-year output has been given. So first year what is the output? It is 60,000 plus 75,000 plus 90,000. So this become first year it become 2 lakh. First 3 years is 2,25,000 and total 5 year it is what? Plus 1,20,000 plus 1,05,000. So total is 4,50,000. It means what will be the lease payment for 3 years? We'll say what is the amount to be recovered in 5 years? 2,92,500, and it will be recovered in this ratio 2,25,000 divided by 4,50,000. So how much it is coming? So this will come 1,46,250. This will be for 3 years. We'll do divide by 3. So divide by 3 it is coming 48,750. So this will be the annual lease payment. You can see annual lease payment is 48,750. Annual lease payment is also known as annual lease rent. Annual lease payment या annual lease rent. But lease rent income, now we need to recognize lease rent income. So can you see, because in this case output is given, so lease rent will be allocated या recognized based on the output. So what we have done, it will be recognized. The total is what? Total is 1,46,250 the first year, second year, third year. What is the output? Output is given 60, 75, 90. 60, 75 and 90. Total is what? 2,25,000. And what is the total lease payment? That is 1,46,250. So this will be allocated in this ratio. So 1,46,250 into divide by 2,25,000 into 60,000. So first year income will be 39,000. Correct. Second year it will be 1,46,250 divided by 2,25,000 into 75,000. So that will be 48,750. And last year it will be 58,500. So this will be lease income. This will be lease income. Understood? Okay. Now they have asked depreciation for 3 years because they have asked in the books of lessor. So in the books of lessor, depreciation will be calculated in this ratio only, in the ratio of output. So what is the cost price? 2,25,000. So 2,25,000 will be allocated in this ratio. So they have allocated in that ratio. That will be depreciation of each year. The first year, second year, third year, you can calculate the depreciation also. Understood? This can be one possible question in exam, can be expected in exam. Understood? Now what will be journal entry? Suppose they ask journal entry. So let me explain you journal entry. Suppose they ask journal entry. So can you say first year, year end one, how in the books of lessor, how much they will receive? They will receive as per the agreement. Means lease annual rent is how much? Annual rent is 48,750. 48,750. And lease income will be 39,000 as per our calculation. 39,000. The difference will be transferred to lease equalization account. We call it lease equalization account. Equalization account. So we call it 48,750 minus 39,000. That will be 9750. 9750. Or we can say this is nothing but pre-received income. Means it is a liability, pre-received income. But normally ICI using this type of term, lease equalization account. You can also use lease equalization account. Second, here you can see the amount is same, 48,750, and the lease income is also 48,750. Third year amount is how much? 48,750, and you can see what is the 58,500. So lease income is 58,500. So automatically lease equalization account will be now debited and this amount will be cancelled. So you can see that is coming what? 9750, and this will tally. This type of journal entry will do. Understood? Have you understood this point? So we'll open one lease equalization account. If lease equalization account has a credit balance, it is a liability. If it is a debit balance, so it will be an asset in the balance sheet. Understood? Asset means we can say it is lease receivable. Liability means it is a lease payable. We can say this is the amount payable. Understood? Got this point? Yes, sir. So this can be one possible type of question in exam. Now coming to last point, sale and leaseback transaction. This type of question can be also asked in exam. Sale and leaseback transaction is what? Ki suppose some asset has been sold to one party. So seller has sold one asset to buyer, and then buyer has leased back that asset again to the seller. That is known as sale and leaseback transaction. Sale and leaseback transaction. So when an asset is sold by the vendor and the same asset leased back to the vendor, it is called as sale and leaseback transaction. Correct? So in this case, what will be the accounting treatment? What will be the accounting treatment? So the accounting treatment is based on whether the lease is a finance lease or lease is an operating lease. So if lease is a finance lease, what they want to say ki the lease transaction will be accounted as per AS 19. So we are not discussing about lease, but in the sale, whatever the gain or loss on sale has been calculated, that will not be recognized as a expense or income immediately in PL. That will be deferred and will be amortized over the lease term in the ratio of depreciation. Means any profit or loss on sale, means sale price minus carrying amount of the asset, should not be immediately recognized in PL of the seller or lessee. Seller or lessee. Seller and lessee are same person. Is to be deferred and amortized over lease term in the ratio of depreciation on leased asset. Means whatever gain or loss you have calculated on sale of asset, that will not be transferred to PL immediately. That will be deferred and will be amortized to PL over lease term in the ratio of depreciation of leased asset. In the ratio of depreciation over leased asset. However, till now this question has not been asked in exam. However, from exam point of view, this is more important. If leaseback is an operating lease. In this, there are three situations. Let me explain these three situations. Got this point? The first situation, sale price is equal to fair value. Whenever sale price is equal to fair value, so can I say this is a normal transaction, means I will say without any adjustment, sale price is equal to fair value. So in that case, whatever gain or loss is calculated on sale of asset will be transferred to PL immediately. Means this is a normal sale transaction, any gain or loss arising out of sale transaction is recognized immediately in PL. So there can be three situations: case 1, case 2, case 3. Sale price, fair value is equal to sale price and fair value are same, and the book value can be equal to 1 lakh. Book value can be 90,000, book value can be 1,50,000. So of course in this case both are same, so there is no gain or loss. There is a gain of 10,000 and then there is a loss of 15,000. Understood? So this gain or loss will be transferred to PL immediately. Then sale price is equal to fair value. What they want to say, sorry, the sale price is below fair value, means sale price is less than fair value. Well, whenever sale price is less than fair value, so there are two situations. However, in this case, gain will be always recognized immediately. Means whenever sale price is less than fair value, if there is a profit on sale, then that profit will be transferred to PL immediately. Correct? Means whenever there is a profit on sale, then that gain on sale will be always transferred to PL immediately. But if there is a loss, then there are two situations. What they want to say, if the loss is not compensated by future lease payment. Loss is not compensated by future lease payment. Just try to understand. I will explain. Suppose sale price is equal to 1 lakh and fair value is 1,10,000. Correct. So if suppose I have an asset whose fair value is 1,10,000 but I am getting 1 lakh. Correct now. So can you say why I am getting 1 lakh? Because I am in need of money. If I am in need of money, the other person can exploit me. Other person can exploit me. So if the loss means other person can exploit me, therefore they are just giving me sale proceed of rupees 1 lakh, which is less than fair value. But if the other person is not able to exploit me, I will demand what 1,10,000. But suppose if I need of only 1 lakh, so I will say adjust the future lease payment. Means there can be two situations. If the loss is not compensated by future lease payment. If the loss is not compensated by future lease payment, the entire loss will be transferred to PL immediately. But if loss is compensated by future lease payment, then loss, whatever we have calculated, then loss will be deferred and will be recognized over the lease term in the ratio of lease payment. In the ratio of lease payment. Understood? So what they are saying, if there is a loss, means sale price is less than carrying amount, it should be recognized immediately provided loss is not compensated by future lease payment. If question is silent, always do this. If question is silent, always write down this in exam, and question may be silent. Correct. But if the loss is compensated by future lease payment, it should be deferred and amortized in the proportion of lease payment over which the asset is expected to be used. Means over the lease term. Over the lease term. Let me give you three situations. If the loss is not compensated by future lease payment, so all the gain, all the loss will be transferred to PL immediately. Understood? Means in this there is no doubt. Sale price, you can see sale price is less than fair value in all cases. Now book value is 1,10,000. Book value is 1,10,000. So you can see sale price is less than book value. So there is a loss of 10,000 will be transferred to PL immediately. You can see sale price is 1 lakh and which is more than what carrying amount. So this will be profit which will be transferred to PL immediately. Then once again sale price is 1 lakh and book value is 1,05,000. This 5,000 loss which will be transferred to PL immediately. But whenever, just one more situation I have given, you can see here book value is 1,15,000 which is more than what? Fair value of the asset. So there is one impairment loss. So what our AS 19 says that if the book value is more than fair value, so first recognize the impairment loss. So impairment loss of 5,000. First impair the asset. So now book value will become 1,10,000 and the sale price is 1 lakh. So there is a loss of 10,000. Means ultimately the total loss is 15,000 which is transferred to PL. Ultimately the total loss is 15,000 which is transferred to PL. Correct now. But first in this particular concept, first we calculate impairment loss and then we calculate gain or loss on sale. Gain or loss on sale. Understood this point? But if the loss is compensated by future payment, then in that case just try to understand what I am saying. In this case there is a loss. There is a loss, you can see. Sale price is less than 1,10,000. So there is a loss. So this will be considered deferred loss. Deferred loss. Correct. Second situation you can see sale price is more than book value. So there is a profit. Profit will be transferred to PL immediately. Correct. Third situation you can see 1 lakh is less than 1,05,000. So there is a loss. This will be deferred loss. This will be deferred loss. Case number 4, 1 lakh. If you compare with 1,15,000, so of course there is a loss of 15,000. But out of this 5,000 impairment loss will be recognized immediately. This is the point. Any impairment loss will be recognized immediately. So first compare book value with fair value. So if book value is more than fair value, there is an impairment loss of 5,000 which will be charged to PL account immediately. And the balance loss will become deferred loss. Balance loss will become deferred loss. Means what is the difference between case 1 and case 2? In case 1, if the loss is not compensated by future payment, then gain or loss will be transferred to PL immediately. But if loss is compensated by future payment, then gain will be transferred to PL immediately, but loss will be deferred loss which will be amortized over the lease term in PL in the ratio of lease payment. Third situation is sale price is more than fair value. Sale price is more than fair value. So in that case, what they say, if sale price is more than fair value, so you are receiving more. So whatever extra amount you have received, that will be known as deferred gain, and deferred gain will be amortized over the lease term in the ratio of lease payment. Correct? So in this case, sale price is more than what fair value. Check karo. And book value is this. So first find out sale price By what amount sale price is more than fair value? So if this 10,000, this become deferred gain. In this also this is deferred gain. In this also this is deferred gain. In this also this is deferred gain. So deferred gain is what? Sale price minus fair value. Correct. Now you'll calculate gain or loss from by comparing fair value and carrying amount. Now you can see 1 lakh and 1 lakh. There is no gain or loss. Are you getting? Now you can see there is no gain or loss. There is no gain or loss. Here you can see there is a fair value is 9. So there is a gain of what? Gain of 10,000. The gain of 10,000 recognized immediately. Now 1 lakh 5,000. There is a loss. So it is an impairment loss because 1 lakh 5,000 is more than what? Fair value. So 5,000 is impairment loss charged to PL. And in this case 120,000, 120,000 1 lakh, so 20,000 is impairment loss, that will be transferred to PL immediately. Or you can say loss will be transferred to PL immediately. So in this case what happened? First calculate deferred gain. Deferred gain will be sale price minus fair value, that will be amortized over the lease term in the ratio of lease payment. In the ratio of lease payment. Understood? So they may ask this type of question, already asked in exam. This type of question can be asked in exam. Let me say, A Limited sold machinery having a WDB of 40 lakh. So book value is 40 lakh. Book value is 40 lakh. And sale price is 50 lakh. And the same machinery was leased back by B Limited. The lease back is an operating lease. Comment, sale price is equal to 50 lakh, which is equal to fair value. So in this case, the gain means sale price, so 10 lakh gain will be transferred to PL immediately. Then fair value is 60 lakh and sale price is equal to what? 50 lakh. So you can see sale price is less than fair value. Sale price is less than fair value. So nothing has been given ki loss is compensated, not compensated. First find out gain or loss. So there is a gain. So there is a gain 50 lakh minus. So gain will be transferred to PL immediately. So once again 10 lakh will be transferred to PL immediately. Now fair value is 45 lakh and sale price is 38 lakh. So once again sale price is less than what? Fair value. Correct. And nothing has been given about loss to be compensated or not to be compensated. But here you can see loss is how much? 40, 38. So there is a loss of 2 lakh. Can I say if nothing has been given, so this will be transferred to PL. If the loss is not compensated by future payment, what is the answer given? Check karo. This loss of 2 lakh to be recognized immediately in PL, provided loss is not compensated by future payment. So always assume that only. Chalega. Then fair value is 40 and sale price is 50. So sale price is more than fair value. So first find out deferred gain. Deferred gain will be 50 minus 40, that is 10 lakh. And then compare fair value is 40 and WDB is 40. So there is no gain or loss. Correct. So deferred gain will be 10 lakh. Then fair value is 46 and this is 50. Once again deferred gain will be 4 lakh. And now compare 46 with the 40. So there is a gain which will transfer to PL will be how much? 6 lakh. Yes sir. Then fair value is 35 and sale price 13. Once again deferred gain is equal to 4 lakh, 39 minus 35, and 35 compare with what? 40. So there is a loss. How much loss? 35 minus 40 means 5 lakh loss. Loss will be 5 lakh which will be transferred to PL immediately. If you read, you will be able to understand. Correct. So deferred gain will be amortized over the lease term in the ratio of lease payment. This is the entire point which you have done as per AS 19. AS 19 is now covered from my point of view. Understood? I hope you have understood AS 19. Correct. We'll meet in the next video with some more accounting standard. Chalega. Right now this much only. Thank you very much and I hope you have understood AS 19. Bye bye. Take care.